Now, before I introduce the panelists for the next session, let me just set the context briefly. The fintech landscape is constantly evolving and changing because of exciting developments. One of the most fascinating arenas is, of course, neobanking. This disruptive force, buoyed by the sharp rise in digital payments and digital financial services, means neobanking is at the forefront of every conversation in the banking sector. It also happens to be at the forefront of our next panel discussion. Please join me in welcoming our illustrious panel of experts for this discussion on reimagining banking. First up, let's welcome Jitendra Gupta, founder of Jupiter. Jitendra co-founded Citrus Pay before selling it to PayU. His career spans 2 decades and includes experiences at PayU and ICICI Bank. Thank you for joining us, Jitendra.
Thanks, Madan.
Thanks for coming. Next, we have Joseph Healy, co-founder and CEO of Judo Bank. Joseph recently took Judo Bank for an IPO on the Australian Stock Exchange. Throughout his career, he has held several prestigious executive positions at NAB, ANZ, CIBC World Markets, Citibank, and Lloyds Bank. Thank you for joining us today, Joseph.
My pleasure.
Now I'd like to introduce Mabel Chaco, co-founder and COO of Open Financial Technologies Private Limited, a serial entrepreneur with over 15 years of rich experience in the financial technology space. Mabel raised $100 million in a recent round of funding for Open, India's first neobanking platform for SMEs. Thank you for joining us today, Mabel.
Thanks, Madan.
Up next, we have Nikhil Kumar, co-founder at Setu. One of Nikhil's remarkable achievements is his work with the iSpirit Foundation, where he worked on building a vibrant developer ecosystem for UPI and GSTN. Thank you for joining us today, Nikhil.
Thank you so much, Madan. Pleasure to be here.
Thanks, Nikhil. And our moderator for this session is Sandeep Lakshman, Head of FinTech for AWS at India. Sandeep is responsible for setting up the FinTech vertical for AWS. But before we start, let me remind attendees to mark your attendance at the FinTech Forum by taking a selfie at the photo booth and posting it on your social media accounts. Make sure you include the hashtag #AWS FinTech Forum. That's one word, #AWS FinTech Forum. I'd also like to bring to your notice that points will be allocated to the attendees for each activity mentioned in the leaderboard, and the winners will be rewarded post this event. But first, Sandeep, over to you for this panel discussion. Sandeep?
Thank you, Madan. Thank you for the introduction. To be honest, before we start, I just want to talk about all the different backgrounds we have amongst all of our speakers. I see a piano behind Nikhil, and I see an amazing background that Jiten has got there. So I don't know, Jiten, where you are, but I'm very jealous of that right now.
I'm in Chikmagalur, man.
We also have, oh, wow, that's awesome. The coffee capital of India. We also have Joseph, who's joining us all the way from Australia. And of course, we have Mabel with us. So why don't we start off with, let's start off with the basic question, right? Banking has kind of remained the same for the last 2 decades, right? There's not much that's changed, right? Yes, we have had, net banking and mobile banking has come, but it's more or less been the same. So I wanted to start with a question about, what are the gaps that all of you have observed in banking for which you're building these products, for which you're building your fintechs today? And I would like to take your perspectives on this. So maybe Jiten, we could start with you.
Hey, Sandeep, I missed the question. There was I think I broke in the network. I'm sorry.
No worries. So, I was interested to understand from you, what are the trends in banking that you've seen in the last 2 decades, right? It's remained almost the same. Yes, we've had net banking and we've had mobile banking that's come in, but typically the way we've done banking has remained the same. So what are the gaps you have seen in the banking ecosystem that you're trying to observe, that you're trying to address today?
Sure. That's a question to me, right?
Yep. To you and
Okay,
anyone else. Yeah.
Okay, great. So thanks, Sandeep, for this panel. So I think the way I see in the last 2 decades, like we have come a long way, honestly, in terms of the whole banking evolution. So we had this whole public sectors being very, very dominant in India. Then we had private sector banks who came in 2000. Somewhere early 2000s, and everybody felt that it's difficult to beat the public sector banks. But we saw 15 years fast forward how things have been evolved. And last 5 years, I have been like, I must say, we have not seen in last 30, 40 years in banking in India. So your UPI, your Aadhaar, and your the whole NEFTs, and the way the transfers have become real time, the way adoption of digital payments have gone into 350, 400 million population, I think is unprecedented. But with each phase, and I consider each phase as earlier it used to be a decade, but now it's sort of fast forwarded to every 4 or 5 year block, which each phase the consumers' expectations also evolve. And I think we are in an era where consumers on one side are seeing all these consumer side apps, which is Amazon or Flipkart or Swiggy or Zomato and all of that, and the experiences there are like, the search, reviews, ratings, recommendation, personalization, all of those kind of experiences. And when you come to the banking apps, while most of the banks have evolved in providing the banking apps, but I think the banking apps in my view have stayed what 10 years back the consumer apps were. So which is like, there is a menu, and there is this the customer has to figure out what they want to do, and there is no interactivity. It's like a feature phone approach. So there are so many features, but there's no interactivity. And I think this is where the customers' expectations have evolved or changed in terms of where they expect their banking apps to be at par with the consumer apps, which means more interactivity, more personalization, great recommendation. And I think this is, and they don't want this spammy approach by banks in terms of, okay, I'm getting like 10 calls a day for credit cards or personal loans and all of that. They want everything in context. And I think that is the evolution which I'm seeing, and at least at Jupiter, we are trying to address that particular part.
I was on mute. Thanks, Jiten. Joseph, I want to bring you in because you recently took Judo IPO. So big congratulations on that, first of all. A big congratulations. It's good to see IPOs happening in the fintech sector. But, I want to talk to you a little bit about your journey, right? Because you focus specifically in the SME market, right? What are the gaps you had observed in the SME market in Australia, for example? Right? And how did you address the problem, and how did that problem change over the course of your journey from a startup to IPO?
That's a great question, and I'm delighted to be here this afternoon. I mean, Judo Bank is a special purpose bank set up to serve the SME economy. The background to Judo Bank, and I'm a career banker with 35 years in the industry. But what I noticed in the industry back when this has been emerging over the last 10, 15 years was a disconnect between the banking system and the community to which it was set up to serve, the concept of social license. And this was particularly true when it came to the SME economy. The banking system in Australia had quite aggressively moved towards the household sector. So it was very pushing lots of mortgages and personal loans and credit cards. And when it came to the SME economy, it basically said, look, we will lend you money if you have property as security. And 95% of all SME lending in the Australian banking system is based on real estate being offered up as security. So we felt that there'd been a market failure in the way that the banking system was serving the SME economy. The Australian banking system, incidentally, is one of the most profitable banking systems in the world. Canada, I think, is a close second. But we felt there was a big gap. The banking system had industrialized. It had become quite self-serving rather than, almost the master of the universe rather than the servant to the universe. And we felt there was an opportunity to build a bank based on traditional principles of customer relationship centricity, but obviously on a very modern platform and a technology-enabled platform. So 5-6 years ago, we started with a PowerPoint, and we had a vision of building a big bank. So we didn't start with, let's build a small bank and grow. We said, let's build a big bank that was a pure play in the sense of looking after the SMEs who were dissatisfied with the service that they were receiving from the incumbent banks. And the incumbent banks, like all big banks and all big companies that have been around for a long time, become quite internally arrogant and quite almost believe in their own destiny, that they become untouchable. And this is part of the disconnect to the customer. Having been a business banker all of my career, I could see an opportunity in the market for building a bank that brought back some of the traditional values in dealing with the butcher, the baker, and the candlestick maker, that had strong credit skills, that, you know, there wasn't algorithm or rules driven per se, because the big issue with SME banking, and I think this is true of SME banking in almost every market around the world, it is, as economists say, information inefficient. It's very difficult to get hold of all the information you need to assess credit risk. And it requires the skill of a banker to collect all of the information that's available electronically, digitally, but then apply a judgment lens over the credit risk of the butcher, the baker, and the candlestick maker. The banking system had lost the craft of SME banking. And so we felt that there was an opportunity to build a bank that brought back those traditional values, and with a bank with a vision of being a big SME bank, not a small bank. And when I fast forward, 5 years, we got our banking license. As you quite rightly said, we became a public company 3 weeks ago with a market valuation of Australian dollars, $2.5 billion. But aspirations still true to the vision that we had of building a world-class, not the biggest, because clearly the big banks in Australia, like in most countries, have a long history with significant advantages. But we believe we can build a world-class SME bank that is true to its purpose of being the most trusted SME business bank in Australia. So that's a long answer to a very simple question, but it started with a vision, it started with a market problem, and it started with think big, not think small. Start with, as Stephen Covey once said, start with the end in mind, and that's what we did.
Yeah, and what I liked over here, Joseph, is you essentially converted SME banking into a data problem, right? So you said that, hey, the issue is we don't have sufficient data and we don't analyze sufficient data, and you converted that into a data problem and addressed that. Is that correct?
That's essentially correct. It's not a problem that's easily solved. I think the big prize in the future of banking is solving that information or data problem in the SME economy. It is largely solved in the consumer economy, and it's largely solved in the large corporate economy. But in the SME economy, as I say, when you're dealing with the butcher, the baker, and the candlestick maker, you can have access to some data, but not all of the data that you need to make an informed credit decision. So it's a great way to frame the strategic opportunity, is solving for the data problem that plagues the SME economy when it comes to the banking system.
Great. I want to bring Mabel in onto this. So Mabel, you also focus on the SME and startup market, right? As a bank and as a neobank, but you have a different model from that of Joseph's Judo. And the difference is that Judo is a licensed bank, but you have gone with a partner model where you're partnering with another bank, right? So I have two questions for you. Number one, how are you looking at the SME market? Is it similar to what Joseph is doing in Australia? Is it something similar? Number two, why the two different models? Why not going for a full license? What are the advantages of these different models?
Well, thank you, everyone, and thanks, Sandeep, for that question. Yeah, we work at a pretty similar model, like Judo Bank does, but that, except for the fact that we don't have a license. Now, why do we don't have a license today? Is because there was no license available to small fintechs, or at the time we started, even this neobanking model of partnering with a bank was pretty new. When we thought of, how do we take a traditional, how the traditional banking license went on, even the Tatas and Birlas and with all the capital that they had couldn't get a banking license. So we being a small startup, there's no chance that I stood for getting a banking license at that time. Having said that, today there are a lot of talks in the regulatory world on how to come up with a digital banking license. Niti Aayog yesterday released a white paper of sorts defining who can apply for a digital bank, and I see this changing in the future. The other part of your question, how it is, what were the challenges that I was trying to address? A lot of the challenges were what I saw doing startups before. I've done Open is my fourth fintech startup. Prior to that, I was trying to set up a payment gateway, and the way, the kind of struggles I've seen in trying to deal with, banks to think of me as a serious business. At that point of time, everything is sorted once you are like, you have 20 employees, you have 20 salary accounts to give, or you have a couple of lakhs to pay for as fees. But when you're just starting up with an idea, there's no one whom you can talk to, and you pretty much exist only in the retail banking world, along with thousands of other customers that the bank has. Some things had to change in the way small businesses are perceived. The other part of the problem was that there is one part which is the business banking, and then the other part which is business finances. And banking was not traditional banking was not talking to the tools that businesses used to use to manage their finances. The invoicing system, the accounting system, the payroll system was all disjointed from the actual layer of the banking layer where money was coming in, money was going out. And what was happening in a typical entrepreneur's life is that you're just logging in and out of devices, interfaces throughout the day, just to make a sense of whether the customer has made the payment or whether your accounting is happening correctly. So we started with a vision to solve that by integrating the two worlds, the business banking world with the business finance world, and getting together on one single platform so that entrepreneurs can see everything in one single interface. Their banking, accounting, compliance, taxation, payroll, expense management, everything comes on one unified platform, and then thereon they can take smarter decisions, faster decisions on how their business is moving.
Thanks, Mabel. For our audience, we can please feel free to ask your questions. I'll be picking them up and asking them to our panelists quite soon. So please put in your questions in the Q&A box that you should see it on the top right corner. Nikhil, I want to come to you because you are a little different than the other neobanks that we have today, right? You're essentially an infrastructure for banks. So why don't you talk to us a little about what Setu does and why you chose to do this?
Sure. For a long time, I actually started my career in some sense trying to solve, the problems that Mabel was talking out on, like how to help SMEs do better banking and try to converge that with their accounting software. And somehow, and then got into the SaaS world, and by luck of chance, I ended up in financial services again. And that's when I got to work on UPI. For a long time, I've always been, a champion of building partnerships, and I've always seen APIs as a way to scale partnerships. So started this journey at Intuit when I actually started working on APIs on QuickBooks, which is one of the most popular accounting softwares, and helping developers build on top of it. So I always had this love towards developers, and when I got a chance to work on UPI, it was very similar. I looked at it as like, it's programmable money. There's so much, innovation that could happen, and and that's how my journey on UPI happened, was to work with everybody in the ecosystem to build various different products and solutions. So when you take this path of going from building products to thinking about in platforms, it's an irreversible change the way you think about it. So one is being a solver and one being an enabler. And each one of them are like different roles. And the fun thing about the enabler role is always that you get to work with various different people, and and help solve more problems, because you're able to work with, just by the design of it, you're able to work with multiple different folks, and each one of them are solving niche problems. So that was really the thinking of like why picking this kind of a problem statement in financial services. Also, during my journey at UPI, I think like the whole, as Jiten was saying, there's a lot that's changed in the last 5-6 years in the financial services world. And it's just not because of the change in the financial services world, but also the world around changed so fast, right? So internet happened, smartphones happened. So in some sense, financial services actually riding that wave in India, especially of the macro changes that have happened just in the consumer internet world. Um, when UPI started, one of the largest challenges that a lot of developers or like startups and fintechs had was like, how do I work with financial institutions? How do I get access to infrastructure? And I'm sure Mabel has had, and Jiten have had their own set of bruises in making this happen in the last few years. So that was the insight, saying, hey, can we solve infrastructure so that people can actually focus on really building amazing consumer experiences, whether it's customer experiences, whether it's for an SME or a retail customer. Can we abstract that complexity of dealing with compliance and various different teams within a financial institution and so on? So that's really why Setu in Sanskrit means bridge. That was the closest we could find to an API. And that's really the spirit at which we've been building various different products. We're very early in our journey, and also on the from a future perspective, I genuinely believe that there will be a lot more people waiting on the consumer experiences, and we're trying to see like what role can we play in providing them the building blocks to make that happen. So that's our story.
I like the way you subtly pitched your product to Mabel and Jiten right over here. So kudos on that.
I've been doing that anyway offline, so
you could also, yes.
And no, we are working with them, by the way.
It's awesome. This is awesome to see, right? The fintechs working together. But Nikhil, you spoke about a few different points, and I want to pull on each of those threads. So first of all, you've essentially building infrastructure which works on top of UPI, right? You're taking advantage of that. And this is one of the questions from the audience as well. Do you see UPI becoming a global real-time payment solution, and UPI type solutions expanding, across the world?
Sure. So I think like UPI has this very different multiple layers of it's almost like this a cake with various different layers. So you can look at it in different angles. There is UPI as a protocol, which is just purely like a technology spec, right? It's just like thinking about like a SMTP protocol which we use for email. There is a protocol angle to UPI, which is open and can be adopted by many different countries, right? So that's one option. Another thing is the UPI as a payment system, which you can tag or label as what's called as a real-time payment system, right? So in India or around the world, as computers, as technology has become more and more efficient, we've moved from what used to be called as batch-based payments to real-time payments, right? So what it simply meant was when you wanted to send money, people would batch in a bunch of things together and then process that transaction versus processing a transaction in real time, right? And this is because computing has become cheaper, technology has become more efficient, and so on and so forth. So there is an overall movement around the world where each country is coming up with its own real-time payment system. So one way to think about whether UPI will happen in another country is to say, hey, does this country have a real-time payment system? It might not have all the features that UPI has. It might probably not be API first and so on, but there is a movement that I see where, various different countries and regulators who are working on creating these real-time payment systems. That's just because the world is evolved and technology is so efficient. None of them can afford to sit back and say, we're going to process batch-based payments anymore, right? So that's on one. The third part is, can there be a global interoperable spec that that enables this transaction where, let's say, if there is a real-time payment system in Singapore and there is a real-time payment system in Australia and there's a real-time payment system in India, can they all work together? Theoretically, yes, right? So there is nothing stopping. That's how the internet works, right? So if you go to US and you access YouTube, India, it obviously changes regions and things like that, but theoretically it can work. Largely, this has not worked because of, concerns around AML, regulatory needs of various different countries, the ability to verify transactions before it's sent to another country and so on. So I would say, as time goes by, I think, organizations like BIS, which is the central bank of central bankers, which is the Bank of International Settlements, they all have been convening various different, governors and, regulated, regulatory bodies of different countries to figure out, how can we build these corridors which enable seamless transfer of money. For example, there is some work going on in ASEAN.
So Nikhil, I'm going to sorry, I want to interrupt you there because you brought up an important point with AML, right? And that comes on to trust, right? And this is a question I have for the panel over here, because banking is a very trust-based systems, right? And one of the issues you're going to face is you're going across, traditional banks have been existed for decades. They have a lot of trust with customers, and you're new in the ecosystem. So I wanted you to talk to the audience a little about how you're building trust in the ecosystem, right? How does a neobank, as a neobank, how do you build trust among your customers, among your SMEs?
So now I can take a first stab at it, Sandeep. So, if you look at it, in the e-commerce world, in way back in 2007, 2008, when they started, everybody had this element of doubt that was online, who will order, whether the goods will come or not, and all of those kind of doubts. And they said it's very difficult to trust the online websites against the retailers, the brick and mortar, basically. I think this is the same situation. And now you look at it, 10 years fast forward, significant majority of savvy population orders online and comfortable with it because the return policies are sorted, disputes are sorted, refunds are sorted. In fact, they find it better and more convenient in the online world. The situation is similar in banking, where today, since it's new, we have these initial apprehensions that, can I trust this? Is my money safe? How will this experience operate? What if I have the issue? How will that get resolved? Who do I go to? I think all of that is the initial thing, and it will get sorted as neobanks show in their behavior, in their customer service, in their day-to-day actions, that they are as good or better than any brick and mortar banks to service the consumers, because I think that is what is about trust. If you service a consumer well, if you are transparent in pricing, if you are transparent in product offering, there's no reason why a consumer or SME should not trust these digital banks. So that's my take on it.
Joseph, what's been your experience in Australia with regard to earning trust?
Well, I would draw a distinction between trust and being liked. And people have grown up trusting the banking system because it's so heavily regulated. But what has increasingly occurred, and this is true around the world, I can't speak specifically about India, but I can speak about other countries that I'm aware of, that the level of engagement and the level of satisfaction and the level of affinity to the banking system has been eroding for decades. But there's still a high level of trust, and particularly it's a generational thing. The generation that I'm in, and I would say the generation of over 40s, have grown up with a banking system that they know, that their parents knew, their grandparents knew, and they're familiar with it, even though they might not like it. But I think what is happening with the almost revolution that we're seeing around the world of fintechs and neobanks and other entrants coming into the market, that younger generation is saying, actually, I prefer innovators. I prefer brands that connect with me and my values. And I don't connect as well with the more traditional banking models. Now, one of the things that plays to the advantage of Judo Bank as a fully regulated bank in Australia is that we are entitled to the same taxpayer guarantee that every deposit made with Judo up to $250,000 is subject to government guarantee in the same way that it is with the more traditional banks. So there's no differentiation in terms of putting your deposit with Judo as distinct from putting it with a deposit with a 150-year-old bank. But businesses, small businesses will say to you, well, I trust the big banks because they've been around for a long time and they are part of the fabric of the community. But they'll also say, I'm not satisfied with the service that they provide. So I think there's a real opportunity for new players to start targeting certain parts of the value chain or the certain parts of the wallet, if you will, of businesses and customers, and starting to build that trust. They already established credibility as innovators of being easy to do business with. But the challenge is the trust. Building trust is a long-term journey. I mean, trust arrives on the back of a tortoise and leaves on the back of a galloping horse. So unfortunately, there's no shortcut. You have to work hard at trust, but you have the advantage that people like you. And so I would draw a distinction, but I would say that it's a long-term game, but all of the tailwind, if you will, is in the favor of the neobank ecosystem. All of the headwinds are in the face of the incumbents. So another long-winded answer to a very simple question, but I hope that was helpful.
I love that quote you gave, that trust comes on the back of a tortoise, but leaves on the back of a galloping horse. I think it's really true. But, you know, we got some amazing questions. I'm going to take some of the audience questions, you know, about the tech that neobanks bring in, right? So most of the banks, they build on-premise. They're, you know, the technology is a little old. All of you are starting from scratch. You can use the latest technologies, right? And, you know, Joseph spoke about how the traditional banks have, you know, don't have the tailwind that the neobanks have, right? How do you see this panning out, right? How do you out-innovate traditional banks with the aid of technology?
So that's a question for me.
It's a question for the panel. So Mabel, you could go. Mabel or Jiten. Yeah.
Mabel, you go first.
Or Nikhil.
All right. So in the new banking world, we need to be agile, both in terms of, you know, customer needs. We need to be agile to customer needs, and that requires us to be both agile in terms of tech and the people behind the scenes. Traditional banks used to rely a lot on, you know, on-prem solutions because that was the need from the regulator due to data localization and all of that. But you know, by the time we were setting up open and the new banking segment in India, we got a lot of help from cloud providers because they had multiple cloud regions within India, and the non-feasibility of data localization and disaster recovery happening was just a thing of the past by the time we started. So being cloud first was not so much of a, you know, challenge for us in scaling it, because you know, we didn't have to build on infrastructure so much. There was a lot of faster go-to-market, the upscaling and downscaling that is required. All of that was happening seamlessly, and it helped us to scale really fast and achieve whatever we had to at the pace that we wanted. And we didn't see so much of you know, downtimes or you know, server upgrade requirements and all. And we also, at least the banking partners we worked with, were not very agnostic to such a movement. So a lot of these things were sorted because such agility was available to us in our growth.
Thank you. I want to just go into another question by the audience. It's a pretty interesting question, and that's on lending, right? And the question is on lending funds to customers. What are the revenue models factored between the main banking partner and the newer bank? right? What is the risk involved in the business, and how's the risk shared?
So, if I have to take a stab at this, so first of all, I think the question is more generalizing that maybe the every structure of lending is supposed to work in a similar fashion, the way it is relevant to one company. So I believe that uh, the lending part of the business would depend on how individual neobank arrangement is with the partner bank. So you can't just productize this part. Like at least when we look at our set of case, so we have our own share of arrangement with the partner bank in terms of uh, uh, like what segments of the products our partner bank would be offering, which is the secured loan kind of stuff, which is the home loans or the auto loans and all of that, or the unsecured part. We will have the ability to offer directly to these set of consumers from our own NBFC. So I think that's the way at least we have structured rather than a sharing of risk in any manner. So as I said, there is no generalization in terms of how you can offer the risk sharing would work. That's not at least our understanding is.
Understood. Nikhil, I want to bring you here into this. Given you're offering the lending and fintech infrastructure to banks, right, including for lending and fixed deposits. How are you seeing this part getting innovated amongst both the neobanks and the traditional banks?
Well, I mean, if you look at the way financial services has been changing rapidly in India, I think the first wave of big change was in payment. And if you look at banking is obviously getting unbundled into, you can think about banking as these different services, right? Payments and deposits and lending and so on. So, which is like the roti kapda makan of financial services in some sense. So now that the wave one is over on payments, I think the wave two and wave two will be on, innovating on deposit accounts, which is where, Jitendra's like Jupiter is doing this on the consumer side, Mabel and the team at Open are doing it on the SME side. And I think once this happens, the next wave obviously will be on reimagining credit as well. So I can think about this in this wave one, wave two, wave three kind of different waves of disruption or innovation that's happening in the financial services world. Which is why I keep saying I think the next 5 years will definitely be a lot more exciting than the last 5 years, right? So even though the last 5 years were exciting enough.
Awesome. Thank you. So, I recently had a conversation with one of the founders of one of the startups, and he was trying to get, a corporate credit card for his startup, right? And he was talking to his bank where he had banked with for like 10 years, and they asked him to give a huge amount of paperwork, and it was taking time. At the same time, he spoke to a neobank, and he got like 5x the limit that he was looking for, and he got it within a few days. Right? This is a significant difference in terms of customer service, right? Of what neobanks offer versus vis-a-vis traditional banks, right? Here's my question. And do you think like the startup and SME sector is typically ignored by the traditional banks, and the neobanks like yourselves are focusing on it? And how's that changing?
I'll take that question. It's one of my favorite topics because I've always struggled to get a corporate credit card for myself. And even after putting, first thing after getting funded, after a pre-series A fund, me and Dina went to the bank and said that here's the deposit for an FD. Give me a credit card that I can link it up to my AWS, or I can link it up for my Facebook ads. And we got a card, and we split it among 4 founders, 5 lakhs on each card. The day I had to go and make an 8 lakhs payment for I think it was for a Money 2020 that we were sponsoring. And for that, when I went to the bank and told, let me increase the limit, here's more money, they said it doesn't happen that way. There's an FD link. I need to go and change all of that. So I wouldn't say banks don't understand, just that the processes are too complicated and their models are built under the traditional underwriting models. Neobanks get a lot more visibility onto customers, onto the customer, say what the invoicing level data, what the receivable level of data for every business is. We know if it's a startup, if it's a funded startup, say a Series A, Series B funded startup, what kind of investors are backing up the startup. A lot of these things go into us decisioning on how much credit limit can be given to someone. It is a lot different from the traditional underwriting models that banks follow, but it also comes with the fact that we are able to do that basis a lot more data that is available to us, that we've been able to gather about the user on the platform.
Thank you. Joseph, I saw you nodding your head as well as Mabel was talking. Is your experience similar?
Well, yes, definitely. But I think I would look at it, I agree entirely with Mabel, but I would look at it from another perspective. One of the advantages that the new neobank or fintech world has, it's a powerful advantage, is that the incumbents or the traditional banks are plagued and constrained by legacy. Not just legacy technology, but legacy systems and processes, legacy infrastructure, and most importantly, legacy thinking. And this thinking doesn't change because the cultural concrete inside large traditional banks was set decades ago. And senior people can come in. I was doing this myself as a senior executive in one of the big banks of 150 years of history, and trying to change the culture. You can change the senior management team. You can launch a new marketing program. But the cultural concrete, that permafrost that is deeply embedded in the organization, does not allow, it's like an immune system that rejects foreign bodies of change. And I would hazard a guess that inside, and I've worked in 6 banks now, this problem is endemic. And so the new system, the new ecosystem that we talk about has a wonderful advantage of legacy free, of information and data rich, and without the complexity of technology that is disjointed and fragmented and sometimes conflicting. And so the ability to look at the customer and give the customer the service that they want without dealing with all of the legacy and the history, because history is a legacy. In a world that's changing so fast, having a long history is not a good thing, right? So I would say that at a strategic level, the advantage that the new neobanking world has is that it's born in a world where data and information is understood, and it's dealing with an incumbency that is plagued like a cancer with so much legacy. It makes it difficult for good people, because inside a lot of these big banks are really good people who want to do the right thing, but the system doesn't work for them anymore. And so it's no surprise when you go to an incumbent bank and say, I want a new corporate credit card, that the individual who you're speaking to would give it to you tomorrow. But the system forces them to go through a level of complexity, an industrialized operating model that has very little flexibility and agility, that makes it really difficult for you, for the banker, to look after the customer. But the customer goes to one of the new players in the market, and it's like a breath of fresh air. So that's how I would think about it. There's nothing. See, the big banks, in my experience, can always outmuscle the new players through marketing, through spin, through the power of being big. But one of the things about Judo, and actually one of the things I would recommend listeners do, is Google Judo strategy, because we built this bank on the literature around Judo strategy. And the Judo strategy is how a small new entrant comes into a market dominated by giants and uses the size and slow-moving incumbency of the giants against them, as you would in a martial art of judo. And I think that's how you should think about competition, is mastering the art of judo strategy and not being put off by the strength and size of the incumbents, but actually seeing that as a weakness, because they cannot respond, as Mabel outlined, to the service proposition that the new players can offer. And for me, that's the exciting thing about the future of banking, is that you can redefine what service means in a way that the incumbents simply cannot. No matter how much marketing and advertising they will undoubtedly spend, they cannot change the organization, because the cultural concrete is set and it's deep and it's old.
Got it. So we have 2 minutes left. So I want to cover one interesting question which came from one of the audience, and I'm going to give that last question to Jiten and Nikhil because it's more focused on consumers. And there's a very important question which came in, and it talks about for neobanks that focus on customer, right? How can customers own more from their savings account with a neobank? And the reason I want to bring in both Jiten and Nikhil for this, Nikhil is specifically because he's got API for FDs, and Jiten because you focus on consumers as well.
Sure. So Sandeep, I think this is the beauty of building a bank, keeping consumers' interest in mind as a first principle. So today, if you look at it, what a bank wants more idle money in saving account balances. Well, that's what benefits them in the cost of funding. And what does a customer want? A customer wants more returns on their money. So I think this is where the way we are thinking about it, that can I basis that saving trend spend or the spending trend, can I recommend to the user within the start of the month, saying that, hey, by the end of the month, you'll have this much idle balance. Why don't you invest today rather than waiting it or for it or figuring it out? Or can we tell them that, hey, this much money you don't need this month or for next few months. Why don't you park in FD? So I think that's the real benefit which we want to offer to the users, which effectively, well, we may not be the guys who are saying that, hey, come with us and we'll give you 10% return or 7% return and 5% return and all of that. The saving account interest rate may still be what is at par with the industry. But the key is, how do you optimize the return on idle money, which is the biggest challenge today for consumers. And I think that is what the problem statement we are solving for.
Awesome. Last 1 minute, Nikhil, before we wrap this up.
Just continuing what Jiten said, I think part of this process is also about removing the friction. So today, the reason why there is a lot of idle money, you could question this and from first principles and say, why is there idle money? And this is usually because of the friction of, of money moving, the velocity of money moving from one account to another account. And thankfully in India, with all the, rails that we have, infrastructure rails that we have like UPI, you can actually in real time fund, let's say, if you want to send money from one stored value account, like savings account to a liquid mutual fund account or an FD or an RD type of a product. So the infrastructure exists today. So what we are trying to do is to say, okay, now that the railroads exist, what are the destinations or different destinations where this money should move to? And that's where we started working on fixed deposits, as one of the products, so that, people who want to enable people to move that money, in a seamless manner can actually do this and book a, fixed deposit in real time and also have access to that money in real time back, right? So it's just not one way, but also being able to access that money and being able to, get it when they want. And I think in the next 3-4 years, we'll see more such, behavioral changes in users, because the friction and the rails, exist, that the friction is getting removed by the rails, and therefore we'll see much more innovation in end user experiences.
Superb. We are all over time now, but I would like to thank all of you for a fantastic discussion. Thank you, Joseph, for joining all the way from Australia. Thank you, Jiten, for the insights into consumer banking. Thank you, Nikhil, for all the work that you're doing in terms of the infrastructure. And thank you, Mabel, for enabling startups get corporate credit cards really easy. I know that's a pain, and I'm glad we have a fantastic panel that's solving all this. Thank you, all of you. Madan, over to you.
Thanks, Sandeep.
Sandeep, Mabel, Jiten, Joseph, Nikhil, thank you so much for that insightful discussion.